What's up, my fellow traders? It's your professor again, ready to give you a market update. So we've been doing these post-market recaps on a daily basis. We showed you the before and the after. If you guys watched my yesterday recap, I told you exactly be prepared for a downside move, and that's exactly what happened in the S&P 500 today. A lot of my levels had hit. A lot of bottoms were formed, and a lot of people were worried about this major dip, but we were actually prepared for it. And I've been noticing on the Finway community, a lot of people were trying to buy the dip here, right? We actually did take an opportunity to buy the dip, but we did it at a point where the premiums settled, the premiums bottomed off, and that's how we pretty much did it here overall. So learning premiums is the way you become successful in trading. You can do many other ways. There's some influencers out there that do these trend lines, but they're more focused on making content and not showing you the before and after like I do. Okay, so a couple of things here, right? So first things first, we pretty much went over the entire market breakdown, and we see that the S&P 500 sold off from around 68.20 and then dipped all the way down at this point here near our level 3 bearish that we provided here. Okay, so this is my daily chart, like always, where I use it for like entry execution, and this is my weekly overview, right? So this allows me to see where the breakout zones are, where the chop ranges are, etc., right? So we can see that on this S&P 500. So if you guys remember, I told you where the top was. Top we hit, we broke down. I even tweeted about it. So going into my Twitter feed here, we provide a lot of information here on a daily basis, right? So we pretty much declared that don't be surprised to see a sell-off if the government reopening, right? The reason why I was so confident that this would happen is simply because of the fact that the put premiums were cheap at this particular point, and they got elevated once we seen the catastrophic drop. So I told you yesterday in the post-market recap that we would see a dive on the S&P 500 and many different techs, and I'm going to be sharing my prediction with you guys near the end here, okay? But as always, I want to go over the education that we did here, and go over the exact trades we've taken here so far, right? So another profitable day. The room is seeing consecutive green days. Okay, so the first thing is that we started our day off. If you guys remember, we had QQQ puts as a swing. We had the 617 puts that we took from yesterday, right? So that was going to be key here. Okay, so we started our day by selling these puts. We sold the 617s at around 114. If we had actually held those, then they would have been they went to as high as around 8 or 9, I don't remember, but we sold at around 4 from 2. That's not a bad exit. It's around 140%. Then we decide to roll into the 610s. Okay, now these 610s pretty much were very cheap, right? We got it around 65 cents. They went to a low of around 40 cents, and then they really started to beast. We took these Broadcom 330 puts here as well, okay? So the reason why we took these QQQ puts in the first place is because we know where our level 1 bearish here is right at this time, right? So we see that initially that if the market really did break down, that it could go between 614 and 608. Okay, so 614 is what we were looking at, and 610 is within these ranges over here, right? So seeing that was under $1, that was a great opportunity to really get it, right? So we see that we went through the neutral chop range zone kind of break below that. You can kind of see in the past as well that this zone tends to be area where QQQ kind of breaks down at, even though it's a chop range. So we did like the puts at that specific level here. Okay, we also took these Broadcom puts. Okay, so everything in this market's elevated, but we see that you know, this hit our first inflection point, did not hit level 2. When it doesn't hit level 2, that means there's no trend that's been confirmed. So as a result, we see that this 331 is our first major inflection point, and we decided to get that at around 80 cents. It was dirt cheap, and we knew that the strike was in range, okay? So those two plays started to really pay off later on. We sold those QQQ puts for 100%. They ended up going a lot higher later on during the day. We sold a Broadcom for 160 puts as well, okay? We took this OKLO put, which only went up a high around 30%. It was pretty much stalling the entire day. And, you know, a lot of commentary there. We tried to get some coin puts as well. Didn't fill. And exactly what we did here is that around this zone over here, we decided to get some QQQ calls, okay? Now, the reason why we got QQQ calls is simply because of this level 3 bearish support that we were at. So those QQQ calls, even considering we start to see a little bit of drop here, did not lose any value, okay? The ones for tomorrow. So anytime you're trying to play these reversal days and you believe that the sell-off is still imminent and that the put premiums are strong, adding a day is very helpful because the calls did not lose any value, and it actually went to a high at around 20%. It was pretty much flat the entire day, even through this chop here. So that allowed traders that didn't feel comfortable holding or swinging to exit out and not lose profits, right? So I warned everyone, I'm very profitable this week. I'm willing to take this shot on a trade that goes against the trend, and that's what exactly did here as well. So I had to leave early on during the day, so we were trying to you know, get out of those to see if they can. And I decided to get my Oracle calls here. So getting Oracle calls is a very risky bet because this stock continued to really get plummeted and it's got beat up. But you know, it hit my level 3 here, okay? So this is a big reversal zone. So let me change my chart here. It hit my level 3 right exactly there. And you start to see that after this immense sell-off, this was the biggest 30-minute candle that is seen in my bearish breakdown zone. Okay, so really like this setup here. The premiums, we added a week as well, so we added time on this to potentially see if it can really start to pay off here. So it has a opportunity to bounce from this and go to this 50-day moving average, potentially 340 if it starts to go there, okay? So let's see if that's the bottom. Another thing that I noticed here as well, Tesla dumped here. We actually had the 420s yesterday. Low-key wish I held them because if we did, it would have been more than 25 on those, but it held my this 35 here. You want to see if it can go back to 416. So I believe that may happen tomorrow. We might see Tesla recover to 416 and potentially 425 is not out of the way there. Okay, and Nvidia's in the chop range here. You might see it go back to around 191. Don't expect major upside for Nvidia just yet. We're going to be looking at this PLTR. It is held by level 1 bearish support. So I called the exact top on this at 195 and it's gone to around 170. Okay, so these charts were given to all our members and we told you guys about it as well. ARM also is now at my estimated weekly low over here, and very interesting to see that, right? You see that AMD also stopped around at my estimated weekly top there and kind of is chilling there as well. So very interesting setup here that we see here. Not really interested in LRCX at all, but we're starting to see, you know, this BitX play looks like it's going to go to 37. So still see weakness in that. OKLO, I don't have numbers for it, but we do have the 95 puts. Even on a strong market, it may get to 89. Okay, so one thing I said about OKLO is that this looks like NBIS, right? So I had the 95 puts on NBIS not so long ago, and you know, we sold it only for 50%, went to 80%, whatever. I just needed to shuffle money around, but this here, once it broke through 95, it really started to really crater, and it's very possible that OKLO is showing similarities to this, okay? And you know, this is going to be a sign that if things continue to the downside, you may start to really see this as well. You know, MU, we had calls for this. It didn't move like how I wanted to, but that was a market weakness. It stopped at my top. It tried to break through. It looked very good at this point here when I thought, okay, like it's gonna test 552. Didn't end up doing that. I had an opportunity to get on my calls at a nice point, but I didn't do it because I wanted to see 252 and 256, but it was very close on achieving those numbers, right? So unfortunately, we didn't get opportunity to do that, but it's something that we were looking at as well, right? So China stocks, they look very interesting as well. So I think they may start to move at one point. Don't have numbers on this. It's not on my watch right now, but next week we're definitely going to have this on the watch list. Iran, so it looks like it's going to hit a bottom at around 47 as well. We're going to keep an eye on that. APLD, these are my old numbers, but it looks like it can really, it's going to go to 21.45. So we'll keep an eye on that to see how it transitions moving forward here. Okay, so that's probably my most important thing here, right? On a side note, a couple things you want to remember. So the government shutdown is no longer there. We reopened, right? So that doesn't necessarily mean that the sell-off is going to continue. There's going to be certain rotations in the market, and I believe Friday is going to be more of a choppy day slash trending upward in a direction. They're probably going to pretty much sell the put premiums because we kind of reach an elevated point. It is possible that we can see 6656, but I think that we're most likely going to see 6762 here, and that's where you might see SPX have a rebound at this zone here, right? So we're looking to see if we continue to trade within this pocket here, okay? So I think we might see a lower high here, and we're going to be watching this very carefully here, okay? Because if SPX gets through 6762, which is not so far away from where it's at right now in futures, you might see it go to 6800 again, and that's going to be the biggest test here moving forward, okay? So other things to note here on the side is that next week we have NVIDIA earnings, which is going to be a major catalyst. Peter Heggs at the Secretary of the War Department mentioned that in a recent tweet that there's an operation involved in Venezuela. So we're going to see if that drives oil prices higher. And pretty much there's some controversy going on in the Trump White House, and that's one thing we're also looking into as well, okay? But overall, the AI sector is getting beat up at this time, and that's the trend right now. AI stocks are weak, and they're being punished for it. Healthcare sector is really strong, and we're seeing movement in Eli Lilly really take it up. So that's what we got going on right now. I see a temporary relief into tomorrow's trading day, where we could probably see a 40 to 50 point move to the upside. Probably I would say my top target would be around 6,800, right? So we're going to be looking at that, and we're going to see if that happens. So thanks for tuning in. We'll see you guys in the next one, and like always, let's get that money.